Mic check. Can you guys hear me? Alright, cool. Thank you, sirs. Alright, hey, what's up, guys? How you doing? Yeah, chop, huh? Gotta love the chop. Chop is insane, says the chat. Always is, always is. Alright, guys, so, look, obviously we had this big dump, okay? It happens. It's gonna happen again many more times, right? So, just get used to it, alright? What we could do in the future is prepare for it as best as possible, and if in the event that you're feeling uncomfortable about things, you just simply don't get into a position until the dust settles, right? I mean, look, in blue you're looking at a massive bearish butterfly, okay? We have been watching this butterfly since the beginning of April. I mean, like, it's been in development. Even you probably go to tweets or posts before that, okay? Now, the thing about the butterfly is it has a range, okay? So this is what caught people off guard the most, okay? But what we need to understand is once this hits a 1272, this butterfly is live, and this could dump at any given moment once it hits this 1272 area, okay? You got it, and that was it, all right? What am I talking about? I'm talking about fibbing from the X high to the A low. and you reached a 1272 fib extension. Okay, guys? Anytime you break out into over previous all-time highs, you break the highs and you hit a 1272 with price action setting up like this, with a harmonic development at a completion zone, you have to immediately become aware. If that's the time you guys exit, well then start exiting there. You don't need to wait for 1414 and 1618, even though they can also happen. Okay, if we would have went all the way to 70k or 69k and hit the 1618 again, it would have all been normal, nothing different. Okay, a butterfly ranges like this. Okay, guys, so I just wanted to kind of start there because it's just the blaring harmonic that's right in our face as we start this stream, right? We have this nasty, big, huge, bearish butterfly in blue, and you see at the D, you just have this dump, okay? So, some things that, you know, were also kind of red flags here is like, look guys, on other assets, we were taking profit on many other things, okay? For example, Ethereum, the target was 2,500. Did we get it? Yes. Did we sell? Yes. All right. Litecoin, the target was 304. Did we sell? Yes. We got our target. So the fact that like all these other assets, and we talked about this many times on the stream, was like, look guys, a lot of things are nearing their completion zones across the board here. Yes. Did Bitcoin have a chance to run a little higher? Sure. But there's no guarantees that it's going to do that, right? As soon as that pattern's live, anything goes to the downside, okay? So you have Bitcoin that hits a 1272 on a butterfly. You also have these butterflies hitting even 1618s on Ethereum and Litecoin. So guys, like that's like a red flag, right? You're looking for the coinciding variables, okay? So if our harmonic is our pattern structure and our coinciding variables being, you know, critical fib levels, critical horizontal line resistance, support resistance, divergence on the MACD, divergence on the RSI, well, another indicator to that storm could be other major cryptos like ETH and Litecoin at completion levels. Okay, guys, so we need to put this all together like one big you know, just one full complete story, right? So we need to take all these pieces and align them, and that's all we can ever do, ever. And we use that to make critical decisions, you know, critical thinking, and you know, that's the best we could do at this point. Now on this 4 hour, we didn't have the clearest signals, which is why there was a possible chance you could have ran up again. But I mean, you do have a MACD diverging bearishly at that completion zone, okay? So there was definitely, you know, some cause for concern here, and most of these other trades, you know, like I said, they had already been completed. Most of this money, guys, from these previous longs down here, these previous longs like in the beginning of April, a lot of this money was on the sidelines, okay? So, you know, it sucks. Like I saw some of you guys saying like and it's hard for me to understand that when my risk management can never allow that to occur, right? So it's hard to relate that way to when you guys say that kind of shit. And basically all that sounds to me is that, okay, we're hitting all these targets, you guys start to see these harmonics more and more and more, and you see them hit targets, okay? So you guys get really confident every time you see me post one. I'm not saying you shouldn't, but I'm saying there's a difference between being confident and being greedy, okay guys? Being confident just allows you to allow your trade to play out or stop out. Being greedy is over leveraging and over positioning on said trade, okay guys? So for example, quick example here, if I had $100,000 stack, okay, and I was in a long position anywhere that could have got me hurt on this, okay, and I was using proper risk to reward, proper position sizing, proper position sizing. My $100,000 trading stack should have only ever had at risk 2 to 3% of that. And of the 2 to 3%, let's go high side, 3%. Let's go even higher. Let's say 4%. Okay, so if you had 4% of that 100,000 in the underlying assets irrelevant. Okay, any position. You get stopped out on a 1R loss on $4,000. How much did you lose? Okay, maybe the 1R, because your target was high, maybe the 1R loss was 12%, 13%. Okay, it sucks. You lost a trade. You got stopped out. You lost 12%, right? But how much money should that have been in USD? On a $100,000 stack, 4% at risk, you were stopped out for 1R. Meaning you should have lost 1R of $4,000. Even if it was 10, 12, 15%, how much money should you have lost there? Somewhere between $400 and $700, okay? Just depending on 3%, 4%, type of thing, leverage, no leverage. But what I'm trying to say, guys, is even if you did that on 2x leverage or 3x leverage or 4x leverage, okay? So say you did that on 4x leverage and you were at 4%, which is a little high. You should be 2 or 3, okay? So 4% on 4x leverage. That means you would have lost 12% times 4. That sucks. That's 48%. But it's 48% of $4,000. Meaning you lost $2,000. Yeah, that hurt. But you still have 98,000 fucking dollars left. How? How did you lose everything in that situation? I don't understand what you're doing. Do you understand what I'm saying to you? Does that example right there, just quick, rough, at the bar type of example, not like ring a bell to you? Guys, you can't even play the game if you're going to play it that way. You're not even playing right. You're just being stupid, okay? This isn't how we play this game, okay? And do I call it a game? Yes, I call it a game. You know why? Because I'm not trading with more than I could afford to lose, A. B, I have another source of income here. This isn't my entire source of income. This is fuck you money, okay, guys? When I make a bunch of money here, all I do with it is a bunch of fuck you things, okay? This isn't my rent. This isn't my family's dinner. Do you understand that? Because it's, I don't feel that you do, all right? I really don't. Not by what I read and not by what I see. Your actions show me otherwise, okay? So if you're not going to play the game right, don't fucking come asking me to fix all your problems for you. You caused those fucking problems. Don't put that shit on me. I got dumped on just like you guys. Do I have all these same problems? No. Why? Because I didn't lose my whole fucking stack like a moron. And I'm sorry, guys, but I told you, if you're a little bitch, this stream ain't gonna be for you. Okay? You guys need to hear this. I have to tell you, because this is what you're seeking. This is what you want. This is what you need to hear. Some of you guys, I don't know, like punishment. You like pain. Okay, well, here's some more of it. Enjoy it. All right? So look, play the game right. If you're not playing the game right, you can't even follow what I'm trying to talk to you about anyways, because it doesn't apply to you. You've created your own arena to play within, and you're doing what you want in your own little world. Okay? So if you're going to do that, do you have the right to do that? Absolutely. Absolutely. You do whatever the hell you want. That's why you like trading, because it gives you the freedom to express yourself in whatever creative mode you fucking see fit. Okay? So if you want to be reckless and you want to display your creativity by being a degenerate gambler and putting your entire life savings into a shitcoin on high leverage because a duck on Twitter told you to, well, that's your prerogative, okay? What a better person, a smarter man would be doing is he would be not just blindly following word for word what anybody says, regardless of how good they are. What you need to do is understand what they do, not blindly follow, okay? So even if myself happens to break a rule, you should be able to identify said break of rule and not blindly jump off the cliff with me. You should say, no, we have rules here. Even Duck's breaking one right now. I'm not going to do that. I'm going to say, hey, Duck, why are you breaking this rule? Didn't you tell us that we should be doing this? And I'm going to be like, you know what? Thank you. Sometimes even I get out of my own realm because so many people, so many undisciplined, impatient people blow up my DMs all fucking day long because they're underwater and over leveraged and blah blah blah, and they need a trade right then and there. Instead of waiting for when an opportunity presents itself, they're trying to force the situation because they've gotten themselves into a bad one. So now, out of nowhere, I need to try and, be a hero when hero time isn't at that moment, right? So you guys are going to get a lot more no's, okay? Put it that way. If you DM me and you want some bullshit trade in between trades, I'm just going to tell you no. That's it. You're not getting it. Just not happening. Because you force me to give it to you, and then you come back and cry about it afterwards. You know what I mean? So, none of that's going down anymore. You guys wait for an edge. If you can't sit on your hands and wait for an edge, then you're not going to be around much longer anyways. So, you're never going to make it. So, you need to learn patience. Patience is a virtue. Learn it. Most of you, again, have not. You've not displayed patience. Also, look, guys, you need to trade within your means, okay? You need to understand that somebody posting a P&L flex of $1 million in a week on Twitter is not something you're going to do with $150 in your stack, okay, guys? I'm just trying to tell you, live within your means, please. And by forcing it, it's only going to make it worse. All you're going to do is quickly lose your $150 instead of trying to gradually and strategically compound and slowly work your way up to where you want to be instead of forcing your way up to where you want to be, okay? So, another thing, guys, look, asking me to replenish all this money that you guys lost isn't going to fucking help you at all. All you're going to do is over position and over leverage and lose my money too, okay? That's it, all right? So, no, I'm not going to refund your losses. Dime might. DM Dime for that shit. Dime does refunds, okay? But what I'm here to teach you guys is I'm here to teach you guys to fish, okay, guys? I'm not your risk management CPA, okay, guys? I'm here to tell you what I look for to enter trades of low risk, high reward with the probability of hitting a target, okay? We're trading in terms of probability. Also, I have came to the realization and understanding that the money that I'm putting up in said trade, that if I get stopped out for $1,000 loss, you know what? I don't give a shit because I've already came to the understanding that that's a possibility in the scenario, okay? That allows me to not feel the stress of the market. It allows me to not be affected by the noise of a candle in the opposite direction of my trade, okay? Why? Because I've come to the realization and accepted the risk of the position. I know right now most of you don't even understand what that means, okay? So look, what you guys need to do is you need to calm the fuck down, okay? Way, way, way emotionally out of control. Way, way, way too much, okay? Breaking rules after rules after rules. Emotionally wrecked. Like, I mean, not at all. Not even close to the mindset required to become a successful trader. Okay? Literally doing this shit to yourself. Stop it. Just fucking stop it. Okay? Alright, so look. I'm not here to yell at you guys, okay? I'm not here to be a dick. I'm not trying to be mean to you guys. If I was doing that, I wouldn't be telling you this, okay? Me being mean to you guys would be telling you that you're doing a good job, okay? So, I'm trying to be your friend here. I'm trying to tell you things that others either A, won't tell you, or B, don't even know exist to tell you. Because, again, these problems, most of these problems are not technical, guys. These are emotional. You're trying to sprint to your goal. You're trying to sprint to retirement like this week or something, guys. Like, it doesn't work that way. You'll find that as soon as you switch your mindset from that rush, I need it now bullshit that you live in with your daily life, I already know. You guys need everything right then and there, and if it doesn't happen for you like that, you freak out. That's just the society that you're living in today, and it sucks because that bleeds into every part of your life. You're impatient in relationships. You're impatient with people you work with or for. You're impatient with people like me trying to help you. You're just an impatient motherfucker. And nobody could solve that for you but yourself. Okay? So please, learn how to take a breath. Okay? Like a deep one. Like you guys seen Bad Boys? Will Smith, Martin Lawrence? You know the cop, the poor their boss, detective, poor guy, he always has to check his ears and do his woo-saw pressure points. Okay, guys, like, that's the kind of shit that, A, you're doing that shit to me, but B, you need to do that shit yourself, okay? Like, woo-saw, right? Woo-saw. Wax on, wax off. Patience. Patience, Daniel-san. Rushing will get you nowhere. We've talked about this. Who could make money in this? We're looking at a chart. It looks to me like bears made some money here. It looks to me also like some bulls made some money here. You know who didn't make any money here? The greedy pigs. They're the ones that got slaughtered, right? I didn't make that shit up, guys. That shit's been happening since day one. And it will happen till the very end, okay? So, which one are you? It's okay to just be a bull. You don't have to take shorts with us. You just take longs. When it's time to short, that's when you go live your life. You get a couple weeks off, check the alerts. Oh, look, it's time to long again. You could just be a bull, and you can make money, okay? Or you can be a bear. You can say, hey, nah, I like trading opposite the herd. I'm only going to take shorts. But you're doing it at strategic moments, and you're not doing it over-leveraged or over-positioned. And both the bears and the bulls can make money and live happily ever after. As they could be fucking neighbors. You know what I mean? But the greedy pig is the one they're eating for dinner, guys. He's getting served up on the table every night. Don't be him. Don't provide the liquidity like that. Be patient. Think of when you first started trading, guys. Your very, very first day. You didn't know anything. You definitely didn't know how to use leverage. You just saw an area of what you felt was low risk, high reward, and you entered the spot position. And you were patient with it. And you didn't even really check it you didn't check it every fucking 5 minutes. I know that. I know you maybe checked it once or twice a day, maybe every other day, but you just let it ride. And were you down a couple of those days? Sure. Maybe you were down the first couple, 2, 3, 4. It doesn't matter. Because eventually you were right. You saw something that clearly looked to you like a low risk area to enter into a position. You entered into the position, you made a few bucks, and you got out. Okay? Did your life change? No. Did you retire off of it? No. But were you stressed? No. Were you more at ease? Were you not feeling the way you are now? Probably. Well, you need to get back to that mindset. You need to get back to the you know, like Rookie says all the time, act like a rookie, trade like a pro. So in that early on days, you were acting like a rookie, but yet you traded like a pro. You were able to unemotionally enter a trade. You saw it through to some profit. You exited. You took profit. Wow, man. But now you don't do that kind of stuff anymore. Now you freak out. You're emotional. You're checking the charts every 5 minutes. You're over leveraged. You're over positioned. You can't sleep. Trading's taking over your life. You're losing money that you can't afford to lose. You're gambling with money you can't afford to lose. Like, all of these things, guys, like, should be red flags to you. You should be like, damn, what the fuck am I doing? Okay? So just try and as weird as that sounds, like, as much as you think you need to be advanced, you also need to be simple with certain things, okay? Don't overthink shit. Don't overthink shit, okay? And that low time frame stuff, definitely got to stop it, okay? It happens too fast. Can you make money on the low time frame? Of course. You can make money on any time frame. But are you going to do it with the same kind of consistency? No, you're not. And B, if you're trading on a low time frame, you gotta be in front of that screen the entire time. You can't leave it. Things will happen too fast, right? So forget the low time frames. Don't even deal with that shit. Okay, the only time we go to low time frames is when we're entering or exiting a position that we have identified on the high time frame. Okay, and it has now telling us that it's time to enter. Okay, that's when you could go down to the lows and try and find an even more optimal entry, like on a 15-minute. But if you're finding your pattern on the 5-minute and the 15-minute or whatever, and you're trying to use divergence on those, can it work? Of course, yes, it can work. But again, your level of consistency is going to be dramatically reduced, okay? And what are we trying to do here? We're trying to create consistency, right? We're trying to become robotic. You don't want to take yourself from a consistent trader and put yourself in an inconsistent situation. That just brings upon bad habits that you're attempting to shed at the same time. Okay, so don't do that, please, okay? So, all right, so next, like, what we're going to look at right here, guys, again, nothing is certain, okay? You have to always be at peace with that. We're literally in an uncertain world trying to create certainty. It's like the most, ass backwards kind of thing possible, but yet that's what we have to do here to become successful, okay? So all we can do in an uncertain world like this, where nobody knows exactly what's going to happen. Why? Because there's unforeseen events that can sway price action. It just is what it is, guys. It's always going to be that way, okay? So what we need to do is just identify these areas, low risk, high reward, areas where the position is more probable to go in the direction that we are seeking than the other. And if we can align, things in our favor, that is how we create an edge. An edge does not mean crystal ball, guys. An edge is simply an edge. Like I said, if we were playing Texas Hold'em, there's 10 people at the table, everyone gets two hole cards, right? Well, say the dealer fucked up and threw us a third one. Well, we have an edge against the rest of the table, okay? We have more information as to what the possible outcome of the 5 cards are on the flop turn river, right? We know what that we have more information about the possible outcomes because we see that third card. But just because we have 3 cards, does that mean we're going to win the hand every time? No. It means we have more information that we need to use to our advantage to either stay in the hand or fold, right? That's it. You got to think about it like that. You're thinking in terms of probability, okay? Poker players think in terms of probability when they are entering say you're calling someone's bet on the river. You're looking at the board and you're thinking, okay, based on the amount of cards that this guy could possibly have as a potential, I'm going to do some math here, and I'm going to say, okay, there's a 60% chance that I could win this hand if I call this guy's bet on the river. But if that's a 20% chance, then you should not call the fucking guy's bet on the river. You should fold, right? You're just thinking in terms of probability, and you're making your decision based on the one that gives you the edge of success. But what happens if you fold? Are you fucked? No. You just play the next hand and you start all over again, and you reevaluate the situation, you reevaluate the information in your hand, at hand, on the table, any of the information that are your variables, right? You reevaluate them and you play the next hand. But if you don't have any more chips because you got liquidated on a 20% probability call, well, that was your fault for calling, wasn't it? Nobody else said call but you. One person at that table said call. It was you. You could have also said fold, but you said call. Nobody's going to be able to make that decision for you on a day-to-day basis, guys. Even if I tell you, hey, guys, the whole group's entering along here, you could still short it. Like, it's still, at the end of the day, it's still you hitting that button. All you're doing is you're using the information that I've proven time and time again to be profitable in the long run, and you're saying, hey, are we in that situation again? Yes or no? Yes? Okay, I'll enter. No? Okay, I won't. That's it. You don't do shit blind, guys. You just take what I'm giving you and you then reevaluate it for yourself based on what you've been taught. Okay, so that being said, let's evaluate a little bit about what we're looking at right here again. So we started this by saying we had this nasty, bearish butterfly. Okay, it kind of, has it played out? Okay, so how would we know? We're looking for a couple things here. Well, for one, we would have been looking for these initial targets. Okay, so you have target 1, C. So we'll make it blue. So you could say target 1, C, was hit. Where would target 2 have been? Target 2 would have been lagging a little bit. Target 2 would have been down here at the A. Was target 2 hit? Yes. Target 2 was hit. What would have been target 3? Target 3 is now the Fibonacci retracements from A low to B high, and we do it again from the C low to the B high. So you have coinciding harmonics overlaying, fibs overlaying, okay? So we overlaid the fibs. What do we got here? Okay, on the low side, so you could see the short ones. See all these short ones, guys? Okay, those short ones are from C to D. So your short ones, you have a 1618 fib retracement hit. Okay, right here. You hit the 1618. What else did you do on the longer one from A to B? You hit the 1272. Okay, guys, we talked about 1272s, didn't we? We talked about 1272s. What did we say about 1272s? We said when 1272s get hit, like they did right here, okay, 1272 gets hit right here, reversals start to occur. Reversals are starting to occur, okay? So these were areas that we would have been looking at to exit, take profit on a short like that, okay? Now, just because you exit and take profit on a short, does that mean you long it? No. But why do we have long duck layered long here? Well, that has nothing to do with this short, okay? These blue lines here are the take profits of the short. That's it. The green box is something else, entirely different. What the green box is a bullish cipher, okay? So discernible swing low. You see how this is an obvious swing low, guys? Discernible swing low, X. To the initial impulse up, A. Mild retrace, B. 618, okay? Got a 618. Then we have a higher high, 1272, right? We just talked about this, 1272. And when we, now we'd be looking for 786, okay? There you go, 786 right there. So guys, look, we have an area where we have a blue bearish butterfly taking profits. People that were short on the 4-hour, on the butterfly, are exiting their position at the $50,000 to 47.5 range. They have exited the short. Then simultaneously you have people like us who layered in and are now in a long based on the 786 of the cipher. We were layered in all the way from the top of this green box to the bottom. Okay? Do we still have orders in here? Yes, I do. Can I still get a lower low in here and fill those orders? Sure. Would not be even a problem. You know what it would do? It would give us a double bottom inside the pattern completion zone. Name one time that's ever been an issue. For me, that sounds a lot like confirmation. Okay, what else is it going to do to us? Okay, let's check this out. Let's look at the oscillators. Let's say, okay, do we have bullish divergence forming at our completion zone? All right, let's look at it. Well, we have a low on price and a lower low on price. Simultaneously, the oscillators are painting lower levels of negative momentum on the MACD and lower levels, higher levels of relative strength, okay? So we now have a story starting to develop, okay? So let's see how many things we got going on. Bearish butterfly in blue has hit a 1618. Bullish cipher in pink has hit a 786. MACD, bullish divergence. RSI, bullish divergence. Okay, that's 4 things right there telling me that this is a potential reversal to the upside, possible relief in price action to the upside. 4 things saying bullish. What's telling me bearish? Okay, what do we got? What do we got, guys? The only thing we really got is if this harmonic fails, we can get a different one. Okay, that's it. What would that look like? It would look like something like this, 113, shark. Okay, that's what could happen if we're wrong. We go down to 40K. That's it. That's like worst case scenario. You have one thing for the bears right now saying, let's go down another level. One thing. So if we look back at this, and even if, let's say, this drops one more slightly lower low and you get the bottom of this green box, all you're going to do at that point is paint a third 3x bullish divergence at that point, because what would happen is your oscillator would slightly sell off and it would create a slightly third higher low on the MACD, on the negative momentum. Okay, that's how you would put in a 3x now bearish divergence if price were to kind of come down and do this, right, before rounding again. And at that same time you would have 3x divergence on price, 3x divergence on MACD, and potentially 3x divergence on the RSI. You see how that would work, guys? All that does is further strengthen our argument. At that point, will I be adding on? Not per se, but I will in a roundabout way, because I still have orders layered in the green box. I tell you guys this, we don't always fill them all. They almost act as stops by themselves, because you're layered all the way through the zone. If you fill them all, great. If you don't, great. I don't care, right? We don't then chase those orders back up here. We just wait for the next one on them. Whatever gets filled, gets filled. That's it. Those were limit orders. We're not market buying, chasing price action back up. Okay? We don't do that. Okay. So, what else are we saying? Okay, so we said, all right, fine. You got a small bearish argument, because if the cipher fails, can it turn into a shark? Yes. And I guess the daily also does look like trash, but we're going to get to that, okay? We're not looking at 100K type shit here, guys. We're talking about get ours, and we're going to get the fuck out again. Because why? Let's look at this. Okay, so again, argument to the upside. Okay, that's what we're looking at here. We're long. X, A, B, C, D. 886 is our current target. What we have here, guys, is a bearish shark now painting. Okay? So on a bearish shark, we have a couple things we got to watch out for here. Okay? So look, more things in our favor to the upside towards target areas. Okay? We have another harmonic coinciding with our larger cipher in pink. You have the yellow shark. They both are aiming for the same area. Why? Because the take profit target on the cipher would have been what? It would have been the A and the C. Well, where's the A? Right there. Okay, guys? That's the take profit target 1 of a cipher. Where's take profit target 2 of the cipher? Right there. Okay, so let me delete these. If you were just looking at the cipher in pink, okay, guys? The take profit target on the cipher in pink is those two green lines right there. Is that clear for you guys? The A high and the C high. Okay, the previous A high, 61,880. Previous C high, 65,000, all-time high. Those are the targets. Double top at the ATH. Okay, guys, double top at all-time high. When we reintroduce the harmonic, the shark now, okay, guys, you can see these areas right here are starting to form an area of interest. You see that? Not only are you going to hit a take profit target 1 of a cipher, but you're going to hit an 886 completion of a shark. Okay? This can push you guys all the way back down again. And this is now when you can get the 41, right? This is when you can sweep everything and come down here to the 41 because you got some more variables pushing you down. But what also happens with sharks? They're tricky. We have to look to the variables, okay, when we get to the 886. If it's not time yet, what can the shark do? Well, the shark can continue and go from an 886 to a 113. Okay? So 113 on a shark now puts us here. What did that just do? That just hit take profit target 2 of the cipher, 65. Take profit target 2 has now been hit. Okay? So the cipher would now be played out. At this point, the pink cipher is played out by the time you get above. As soon as you hit the X, 65, this cipher is now done. Okay? So, cipher's done. What else am I looking at? Okay, I'm looking at this Sharks 113. We gotta watch it. We gotta watch out. What's gonna happen there? Watch this. See this trend line? Well, it's gonna hit up there, okay? You're gonna run into it. Overhead resistance, critical fib level, pattern completion zone. If we have bearish divergence on the RSI and MACD, excuse me, it's only going to further strengthen the argument to the bearish side at this point. Again, guys, really at this point, 66,800, that's probably it. Makes sense. Sweep the highs one more time, and then just wreckage again. What would be the stop on this? The stop on a shark is a 1618. The 1618 is high. It's no joke, guys. This is why when we hit that shark, we need the coinciding variables. The stop loss on the shark is going to be above 74,000. Okay? It's high. You need to be accounting for, and you got to be above it, not right at the 1618, because it'll touch it. Sometimes they don't fucking touch it. It's got to be above that, like 75, guys. Is that crazy? Taking a short at 113 and having a stop at 75? Let's look at that. Again, guys, this is the way it works, though. So if you can't account for a stop this wide, all it means is you're over leveraged and over positioned. That's all you can do, is ask yourself, look at your position. Say, shit, how come I cannot have a stop right here? Why? Well, I need to have a 3-to-1 target. Okay, so in order to have a stop there, my target has to be 3-to-1. That means it's right here, 42. What did we just say, guys? If we get this shark, this is how we could get that 42 that everyone wants right now. Everybody, of course, is still bearish, right? Everybody's like, nope, this shark, this cipher is not a shark. It's going to be, or it's not a cipher, it's a shark. It's going to the 113. Well, yeah, I see you getting this 113 down here, but I see you doing it after. You see that? Okay, so what happens on these sharks? Okay, let's clean this up. Let's just look at the shark. We got to be careful because sharks can do two things, okay? Number one, a bearish shark by itself can act as a top signaling reversal pattern, okay? But a bearish shark can also retrace 50% of the way and morph into a bullish 5-0. So let's look at that now. What's it going to be? Again, how do we know? It's the oscillators will tell us, okay, guys? So when we get to this 113, how would this morph, okay? So if that was a completed shark, you would then fib from the C low to the D high. You would be looking at this 50% fib retracement, okay, guys? See, there's your 50% fib. So the way a shark would morph, or the way a bearish shark would morph into a bullish 5-0, is this price would get all the way up here, and then on the way back down, you hit the 50%. You double bottom at the 50, and that's how you could run again. So, couple critical things. One, critical, we need to see the divergence at the completion zone of the shark. That's either going to happen two places. It's either the 113 or it's the 886. So what do I like to do? For one, go to the variables, but for two, I will layer from here through here short. Okay? That will be a short area, shorting back to the 5-0. If at the 50 we're showing bearish convergence, then we say this is full reversal. Bearish shark stays bearish shark. If at the 50 we're showing some kind of hidden bullish divergence or standard class A bullish divergence, then we could say, okay, this shark might morph into a 5-0. Guys, don't worry if that sounds confusing right now. You're going to get alerts with chart example explanations right beside it. It's going to make more sense as the price hits the areas, and then if it respects and reverses from said areas, you'll be like, okay, I see what sharks do now, and I also see how they morph into 5-0s or how they don't morph into 5-0s. That's all we can do right now. But we are painting coinciding, type of price action here, where we have harmonics aligning with each other. We have that big cipher that says time to go up. We have the bearish shark that also says time to go up. I know it sounds funny calling a bearish harmonic an up signal, but it is, because look, if this harmonic completes, right, when it completes, it's bearish, right? So that's why we call it a bearish shark, even though from current price action it could take you up in price. So don't let that confuse you either, okay? So long story short, guys, I mean, again, like you enter trades when we have things aligning. Did we just talk about things aligning? Yes, we talked about a handful of things aligning. Do we take a shot at that? Sure. I always do. Always will, always do. The problem that gets missed is that people ape in with everything. Okay? That's where you go wrong. Okay, guys? Just because we find a pattern does not mean, it never will mean full stack. Okay, guys? It just doesn't. It means we found an edge, we decide the amount of risk tolerance that we have internally, and we take said position based on said risk management, said level of, risk tolerance. Everyone's got a different level. Some older traders aren't going to be as risky. They're going to be like, bro, I'm retiring in a couple years. I'm not going to be as risky as you guys. But some of you guys are like freaking 12. I don't know. You can be risky. You have plenty of time to recover any sort of mistakes you make, right? But older traders have to be more conservative, right? So that, by what I'm saying there, is that's how I'm defining your level of risk tolerance, right? Who can tolerate more of a loss? Well, the person that could tolerate more of a loss also is setting themselves up for higher gains, right? But that's the game you're playing. Your risk to reward is based on all of those factors, right? Position sizing, risk tolerance, all of it. Okay, so somebody being conservative would see this harmonic. They would see it hit at 48. They'd say, I'm going to jump in with a little bit of spot here, and if it goes down to the second harmonic at 42, I'm going to jump in with more spot there. Neither situation liquidated them. One of the situations could have had them holding an underwater bag for a few days. It happens. Get used to it. Nobody is ever at all times in the green. I mean, dude, there's times I'll be underwater. It happens. Like, it's just part of the game. I just try to find the best area to enter, and that's all we can do. If people want to, look guys, if it's the bottom right here and people want to short the bottom, can they push price down a little bit further? Sure. But are they going to probably get stopped out or liquidated because they're shorting the bottom? Yeah. But during that first couple minutes, they're still pushing price down. So just because we entered a pattern completion zone at a critical fib does not mean a wick can't go below the fibs, right? Okay, well, if that happened, would we have been underwater temporarily? Sure. Even if we had more bids resting below, we still dollar cost averaged into a slightly underwater position. I'm not talking about all your money's gone. I'm talking about you're down like half of 1% for a while. Like that kind of thing happens all the time. Okay, guys? So again, we just layer in where appropriate and we allow things to play out. Okay? So we're looking for this divergence. What would be bad? Seeing lower lows, lower levels of negative momentum, lower levels of relative strength. But as long as we keep seeing higher levels of negative momentum, higher levels of relative strength, we can see that the tide is starting to shift and that we can see our potential relief to the upside. We also have a bunch of square up areas up here to deal with. You have a square up at 55, you have a square up at 60, you have a square up at 62, you have a square up at 63. All of those are potential areas of interest, okay? Just be mindful. Be mindful, guys. But ultimately, this entire rant was about over-positioning, over-leveraging. You're going to get more of them. So until you cut that shit out, I mean, that's really it, right? So, okay, guys, here's Ethereum. Let's zoom out a little bit here. Sorry, it's freaking lagging. Gosh. Trading view is killing me. Zoom, 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 zoom. Okay, guys. Again, Ethereum. We had an X, A, B, C, D pattern here. And we had, I'm trying to get this on a larger time frame here. Okay, right here. Larger time frame structure. We had X, A, B, C, D 1618. Where is it at? It was right here, 1618. Okay, guys. So, looking at the butterfly in purple first. We exited Ethereum $2,500. Okay? 1618 was $2,500 and 2509 or something. Did price go above it? Yes. Did Duck give a shit? No. Okay? When we hit these completion zones like this, 1618, golden mean ratio, bearish butterfly type of patterns, right? Here's the thing, guys, like when we hit that 2500 area and I told you guys that I was exiting my long and that I was entering into a short, like nobody even cares. Nobody believes me anyways. Nobody wants to hear it when we get there, right? So it's like I could tell you guys all this stuff anyways, and you still don't believe it. You're still emotionally against yourself, right? You're fighting yourself because you're like, no, this is up only. Ethereum's going to 50K. Everyone on Twitter said, blah. I mean, I don't know what your logic was, but people refused to exit at 2,500. It dumped. Jeez, look at that. Did it go up again after? Yeah. We hit another target. We got out of that one too. I mean, that target was much lower than where it went. Do I care? No. Here's what we did. X, A, B, C, D, 886, we sold. 886 was right there, we sold. What happened when we sold? Dumped. Yeah, did it go up higher? Whatever. I don't care, guys. I don't care. We don't need to hit every last dollar of every single trade. We don't need to buy the absolute bottom and sell the absolute top. All we need to do is remain consistently profitable. We need to take ours when it's there. And when we take it, we get out. Don't look back at ETH. Just don't. If this little bit of extra from here to here freaks you out and you're like, oh my god, why did I not get the rest of that ETH long? I'm never going to make it now. You're right. You are never going to make it. And it has nothing to do with the rest of that ETH long. It had to do with your mindset. Okay? For some reason, you felt FOMO right there. And you're like, oh no. If I'm not in this ETH long from 24.50 to 25.50, my life is over. Does that make any sense to anybody? Because it doesn't to me, but that's how you guys act, okay? That's how you fucking act. Please, get your shit in check. Like, understand what trades are for. They're for increasing our Bitcoin stack. They're not for the fundamentals of Ethereum. We don't care about Russian Ethereum and Vitalik. We don't give a shit about any of that. We use it as an instrument to increase our portfolio and our Bitcoin holdings. I could care less about Ethereum as a product. If Ethereum went to zero tomorrow, I would give zero fucks, okay? It would do nothing to me in my world. I would not lose a second of sleep. I would not be upset by it. I would not be bothered by it. I would not be emotional over it. I would not be calling scam. I would not be doing any of that dumb shit. Because it's just some shitcoin with some random ticker. And that's it. So, I mean, I don't know. That's all I can tell you. Was it ETH short stop on the trade 2570? Yeah, it probably was, because if you shorted the 886, then you would have got stopped above it. But if you shorted the 886, you were also in profit. You were in profit, Did it go back and invalidate it? Sure. Whatever. Okay? It happens. And your stop could have been very, very tight. I mean, geez, where would your stop have possibly been? How much could you have possibly lost if you entered right here, or you entered right here and you got stopped out right there? How much possible money could you fucking manage to lose in 1.8% of a loss? Like, I just don't, even if that was the stop, so what, right? It shouldn't ever be devastating, guys. It should just be a little bit of, you shouldn't even really feel it. You know what I mean? Does Twitch time you out for swearing? Probably. Fuck Twitch. So, yeah, I don't know, guys. Just, a stop loss cannot be a devastating event. It just cannot be. If your stop loss is devastating you, you are way fucking overpositioned and way fucking over leveraged. No doubt in my mind. It's not even debatable. If that little stop right there affects you in a way that causes any sort of emotional pain, you're the problem, not the stop. Look in the fucking mirror. Look at your position size. Compare that to your portfolio. You're trading way outside of your means, way over leveraged. You deserve to get stopped for that shit. I don't even care. I don't even care. That's it. It's a lesson you needed to learn. I'm happy to be a part of teaching it to you. Okay? So yeah, I mean, it's going to happen. Whatever. I don't lose sleep over it. You know what I do? I move on. I reevaluate the market. I look for the next area of opportunity and I re-enter again. I don't act like a scared little bitch afraid to get back into a trade because the previous one scarred me for life. That was your fault. Okay? So, for me, did it affect me at all? None. Absolutely nothing. The only way I'm being affected is listening to you guys cry. Okay? That's what's affecting me. It had nothing to do with my stop. Had nothing to do with my position size. Had nothing to do with my leverage. In fact, I still have the majority of all of my capital, and I'm ready to throw another punch at moment's notice. Okay? That's all that you should ever be worried about. Alright? So, guys, if you walk into a casino, again, let's go back to this, because I don't know how else to relate shit to you guys, other than maybe the degen gambler side of it. We walk into a casino right now, this very second. Just met you guys in Vegas. We just landed, got to the casino, just walked into the MGM Grand. Let's play some cards, guys. Let's hit the tables. Let's do something exciting, right? Let's shake it up a little bit here, right? We just got here. We're only here for a couple days, right? But so you're like, okay, yeah, let's play. Fuck yeah, I came to play. I brought some money to gamble with. All right, right there, first thing. I brought some money to gamble with. That wasn't your mortgage. That wasn't your, you know what I mean, your car payment. That was some Vegas fuck you money, wasn't it? Yeah, it was, okay? So, you already have accepted that even if you lose everything that you brought with you to Vegas, you're going to go back and you're going to be just fine and move on like nothing even happened, right? Because you've already accepted that. So that was step one. Step two, you came into this casino and you're a fucking degen gambler when it comes to your trading, but yet when you go walk into a casino and you sit down at a blackjack table and you had 10 grand in your pocket, I didn't see you put 10 grand out on the first hand and then ask the casino to 10x that on leverage for you, and here's your credit card just in case you're wrong, right? Who the fuck does that? Who goes in there in the very first hand, puts their entire 10 grand, one hand of blackjack, and asks for 10x leverage on the hand? So why do you guys do that with your trading? Why? If you wouldn't do that in a casino, in the most degenerate scenario almost imaginable, you're able to have self-control there. You're fucking drinking. You still have self-control. You're all coked out. You still have fucking self-control. But yet, some reason, sober as a judge, sitting there in front of your computer, you have zero control over anything. I just don't understand. What changed? What was it? Greed? Overconfidence? I mean, are you overconfident when you're playing blackjack? No, you're not. You call it like you see it, guys. The hands are dealt. You say, okay, this is a shit hand. I'm gonna surrender. Give me half my money back. All right. Or you're gonna say, hit. Or you're gonna say stand. It's easy for you because your risk is mitigated to that one hand. Even the casino themselves helped you risk management. They're like, look, bro, you got 10 grand in chips there. How much you gonna place your bets? So you're like, okay, I got 10 grand here. I'm gonna bet $500. Okay, well, that's a pretty good sized bet there, sir, but you still didn't bet your whole fucking stack, did you? No. And did you bet that $500 on leverage? No. So what's your infatuation with leverage? Why must you throttle the fuck out of the leverage every time? Like, what is your deal with that? You don't do that at the casino. You don't do that anywhere else. But yet for some reason, you feel that the only way you're going to be successful as a trader is to use high leverage. I'm not sure who or why or what told you that, but it's wrong. It's not true. So the sooner you realize that, the better off you'll be. I mean, I've told you guys this before. The higher the leverage, the more money you lose. The lower the leverage, the more money you make. Are we here to make money or lose money? We're here to make money? Okay. Well then, no more high leverage. Simple as that. Again, back to position sizing. We sit down at that blackjack table. Guys, we've been in Vegas 45 minutes. You're going to be here for 3 days. In the first 45 minutes, you're going to lose every fucking penny that you brought? I mean, no, right? Who would do that? Nobody. So again, I don't understand when you guys DM me telling me that you just did that in trading. I just don't. And it's really fucking hard for me to have any sympathy for you. And I'm definitely not going to give you my money to fucking trade with. You've obviously only displayed that you're not capable of trading correctly. That's all you're displaying. So is that who I want to have as my running my capital for me, making trades on my behalf with my stack? No, God no. Might as well just light it on fire, right? That's all you're going to do. So don't be like that, okay? Don't be like that. Get your mind right. Get your act together. Entire feed's out of control. I can't even chart right now, guys, because fuck, man. Too worried about you guys' chaos. You're causing absolute chaos out here. All right. Fuck, sorry. Okay. Let's see where we are here on ETH. Okay, so look, difference on ETH from Bitcoin is a significant factor, okay? Bitcoin and Litecoin are painting bullish divergence on the 4-hour, whereas Ethereum is not, okay? Ethereum is actually painting bullish convergence. This is where the oscillators are converging in the same direction as price action. So Ethereum here, even though we like Class A bullish divergence for reversals, which is what we're seeing on Litecoin and Bitcoin, but on Ethereum, man, this sucker is just showing just some serious strength here, guys. So if Bitcoin can hold up here for a while and get its way up to the bearish shark completion, right? Play out the bullish cipher, which would put us in the basically 62 to 63K region. If that happens, Ethereum here could see three grand. Okay, guys? So it's probably going to be a very simple 1618 from the previous swing high to the current low. Yeah, just like I thought. Okay, there you go. 1618. $2,980. That's Ethereum at 3,000 basically, guys, okay? So that is what the current situation is here on Ethereum. We need Bitcoin to hold up. If and when Bitcoin can hold up, ETH is more than likely painting a butterfly here, guys. Deep crab type butterfly type stuff, where we have a higher low on price and we end up at the 1618. Okay, we've seen this story before. Again, though, we know that when this gets to the 1272, we got to be mindful, right? I mean, we have a lot of work to do. First, you have an 886, right? Right here, 886, you're going to be painting a bearish bat. We would likely and hopefully invalidate this. At this point, you would then hit the 1272. Probably get a small pullback there, retest previous all-time highs. Then you run and get this 141618 type shit. Okay, that's how we get Ethereum up to the 3K area. Ethereum right now, out of the three, Bitcoin, Litecoin, Ethereum right now, Ethereum is showing the most strength. Ethereum is outperforming Bitcoin, not even close, since in the past like 2 months, guys. Since Duck's birthday. February the 28th, okay? Ethereum has been outperforming Bitcoin since Duck's birthday, and it's not even close or debatable. So if Bitcoin can just hold up a little bit, again, likely Ethereum outperforms again and hits a 1618 golden mean ratio, well, Bitcoin would only be getting a, bearish shark type 113, right? Nowhere near a 1618. So that's what we're kind of looking for there on ETH, guys, is 3K. I mean, Bitcoin has to hold. Again, no matter what shitcoin you're looking at here, if Bitcoin dumps, they all fucking dump. Okay, we talked about that, guys. We said, look, most of these shitcoins are already hitting targets, but you have some that are lagging. They were things like, CHR, CHZ, Theta. Theta was lagging. These things were lagging as far as some of these other alts had already played out. I said, look, Theta, they look good. They pumped. You guys were in fucking mad profit on all of those. Do not say that you weren't. You just failed to trail stops, or even if you would have put a stop at break even, you would have lost nothing. Yeah, you would have lost potential unrealized P&L, but you wouldn't have lost any of your money, guys. So the best thing I can do is get you well into profit, and then if Bitcoin decides to shit the bed, there's nothing I can do for those altcoins that's going to save them, guys. This is going to happen forever. This has been happening since altcoins started. Anytime Bitcoin dumps, these things get fucking destroyed, okay? If you see a 10% dump in Bitcoin, you're going to see a 20 or 30% drop in alts. Never going to change. Never will. Never will change. So the next 30 or 10K drop in Bitcoin, look at alts again. 20, 30% down again. Get fucking used to it, okay? It's never going to change. Your shitcoins are worthless. Their fundamentals are trash. We're not here for the tech. Way too early. The fundamentals of Theta are not going to save you. They just are not. If you're here as an investor, your mindset is completely fucked. Okay, guys? Crypto is not for investors. These are not investment instruments. These are shit coins that barely have working products. Most of them don't. Most of them are just copy pastes of others. They're all shit, guys. You can't invest in shit and expect returns in the long run. It's just not. That's just really stupid, okay? It's really, really stupid. What we do here is we take the windows of opportunity that the shitcoins present. These windows vary in duration and they vary in occurrence. When we see them happen, we take advantage, we take what we can from said shitcoin, and we get the fuck out of there. That's it. That's it. You're never going to hear me talking about these cryptos as the future of finance and all that garbage that you want that shit, that's for TikTok, bruh. Go get your trading investment advice from TikTok and Facebook if you're here for the fundamentals of altcoins. So, yeah. I don't know. So, let's see here, guys. We looked at ETH, Litecoin. Let me show you the difference. ETH, we just showed you the convergence, okay? But on Litecoin, we have divergence. See how on ETH they were converging together, and on Litecoin they're diverging apart, okay? This is not a bad thing, guys. This is just the difference in the strength of assets. Bullish divergence here on Bitcoin and Litecoin is still ultimately bullish, guys. Bullish divergence. I'm just trying to tell you guys that typically we see these assets coinciding, right? Like if we saw bullish divergence on Bitcoin and Litecoin, typically we have it on Ethereum as well. But right now, we're seeing Ethereum showing the bullish convergence. So it's just a red flag. Not red flag, it's just something to note. Like if I was position sizing here and I was taking 3 longs on my $100,000 stack and I was going to put something into Bitcoin, Litecoin, Ethereum here, I would put less money into Bitcoin and Litecoin as I would Ethereum here. I would never still go above my 3 or 4%, right? But I might only put 1%, 1,000 into Bitcoin, 1%, 1,000 into Litecoin, but maybe 3,000 or 3,500 into Ethereum. So you can see how, yes, position sizes can differ, but they're still being mindful of my overall stack as the amount that's entered. I hope that makes sense. But ultimately, guys, that's something that I do personally because I've been doing this for many, many, many years. What I would recommend to you guys is that you still maintain consistency across the board, regardless of how sweet that setup may look compared to the others, okay? So what I mean by that is just put the 1,000 across each of the 3. Don't personally go to that extra like I said I would do on Ethereum. You're just not ready for it yet. Guys, if you don't understand what I'm explaining to you with risk management, but yet you're using leverage, that just goes to show how novice of a trader you still are. That you're willing to do something you don't understand fully and yet put your life savings in the trade. That just shows how immature you are as a trading, how immature your trader's mindset is. That you're willing to do such, I can't even come up with the word for how just reckless that is, okay? Live within your means. If you're trading with 100 grand, 500 a trade, 1,000 a trade, that's it. If you're trading with $1,000, well, you shouldn't be putting more than like $50 into a trade. You live within your means, guys. Unless you like being on the verge of liquidation all the time, or you just enjoy pain, there's no way you can stomach chop over positioned, over leveraged. You just can't. The point of the chop is to get you guys who are over positioned and over leveraged to give up your trade before it goes in your favor. That's literally the point of the market chop, is to chop you out before it goes where you're aiming. Is it going to hit where you're aiming? Probably. Yeah. Is it going to get there without you? Also, yeah. That's the point. You're not supposed to get those gains. So how do you get those gains? Well, I'm going to tell you guys right now that trading on spot for most of you guys, that should be it, okay? Most of you guys are not mentally capable of trading on leverage at this point in your trading careers. You're way too early. I'm going to tell you guys something right now. If you've been trading less than 2 years, I'm even going to say 3 years. If you've been trading less than 3 years, you literally have no business trading with leverage, margin, any of that shit. You shouldn't even understand what that means yet. It's like somebody playing football for the first time, right? You're like, or like your first time playing tackle football. You're like 13 years old. But yet, for some reason, you think you should be in the NFL. Just because you threw one pass and someone threw the ball back to you, hit you in the nose or something, right? You think you're ready for the NFL. That's what you're basically telling me. When you've been trading so few weeks, months, years, but yet you feel like you understand 50x leverage, right? Can you see the just outright cockiness you're displaying and why you deserve to be stopped out and licked? Does that not make sense to you guys? Like, as that 13-year-old kid, think your dick's huge, biggest balls on planet Earth, I could play NFL football today. First play, what's going to happen to you? Card him out. Card him off the field. He's done, right? It's over. Wrecked. Never going to make it. Career-ending injury, right? That's what you guys are doing. You're literally going out there and swinging for the fences. You don't even know where first base is at. You're trying to hit a home run. Play within your means, guys. If you've never hit the ball outside of the infield, maybe you're a bunter. You should just work on bunting for now, okay? You should not be swinging for home runs, okay, guys? It's like people go warm up playing basketball. These kids, they start shooting threes right away. It's like, bro, I haven't even seen you make a free throw. Make a fucking layup with your left hand. What are you doing shooting NBA threes? You can't even tie your own shoes yet. Somewhere in the happy middle of all that is where you guys need to end up. But right now, a lot of you guys are that exact thing I'm just explaining, okay? I don't know how, I'm trying to say it nice, and I'm trying to say it relatable so you can understand it, but yeah, that's what you're doing. So, hope you realize that that's what you're doing. You have to, it's like the first part of an addict, right? You have to understand the problem. If you don't understand the problem, you can't fix it. So you have to understand the problem is you're over leveraging and you're over positioning. You need to start right fucking there. Okay? Yeah, next, yeah, if leverage, okay, let me answer this for yourself. You don't even have to tell anybody. Just, do you make money or lose money as a leverage trader? Are you a profitable leverage trader or an unprofitable leverage trader? Take a second, ask yourself that. I know you know the answer. I know you don't have to fucking check this stack of files to find that answer. It's probably, you already know it. It's yes or no. So if your answer is no, I am not a profitable leverage trader, well, then you've identified part of the problem. Leverage, right? You're using something that's hurting you. It's not helping you. So you think by increasing your leverage may help you? No. It's just further self-destruction, right? So if you guys have identified something that's affecting you in a negative way, do me a favor. Stop trading with leverage. And I didn't say for the rest of your life, because I know you obviously are degen as fuck, and you can't help yourself because you're already doing it, right? But yeah, I mean, okay, do yourself a favor. Attempt just for a few weeks or a couple months, trade with us, but trade spot. Okay? See if the results change, right? You'll know. It'll be obvious. Are the results the same, worse, or better? Well, if they're worse, then trading's not for you. If they're the same, they shouldn't be. And if they're better, well, you've probably figured out that you're a better spot trader. Okay? It fits your persona more. Okay? There's nothing wrong with that, guys. Some of the best traders in the world trade spot only. So that's why I always wonder what this infatuation with leverage is. I don't understand who told you guys, like in the beginning, that you have to be using leverage or you're never going to make it. So that's how you guys act, right? So like somehow I'm trying to break that mindset from you. I'm trying to tell you that the exact opposite is true. That by using over leverage, you're never going to make it. Okay, guys, the spot traders actually has a better chance here because he could handle the chop, and you're not going to emotionally fucking wreck yourself. You guys are losing years off of your life here with the emotional stress you're self-inflicting upon yourselves. Guys, I'm here because this is supposed to relieve stress, not create it. If people who create stress in Duck's world quickly get eliminated from Duck's world. That's what happens, okay? Because I'm trying to work on my emotions 24/7. I'm not going to let your problems affect my emotional status. It's much easier for me to just mute your ass. You see what I mean? So, I'm here to help you, yes. But I'm not here to fucking carry your baggage around on my back, okay? I got enough shit to deal with, just in general, okay, guys? I'm trying to keep the damn electrical grid alive just so you could trade fucking shit coins, just so you have the ability to lose all your money, okay? Like, I have enough shit to deal with. I can't carry your emotional baggage for you. That's your fucking problem, okay? What I'm trying to do is tell you how I fish. What I do is I look for harmonics to hit completion zones. I look for divergence on multiple oscillators when that occurs. I also look for it to be occurring on a significant time frame and ideally at a critical support resistance level, and ideally coinciding with other macro assets like Bitcoin and Ethereum and Litecoin, right? When all those things happen, I take a trade. Am I right all the time? No. How many times do we have to be right to be profitable here? 33%, guys. That means I can actually be wrong more than half of the time and still retire profitable here from trading. Do you understand that? Do you understand the edge that we're creating? This edge is not, you can't have the same edge when you change the rules. The edge we created is based on certain rules and variables. When you introduce your personal bullshit into all that, that's not the same conversation. You're now having a conversation between you and your fucking self because of what you chose to do. Okay, guys? That's all I can tell you. I'm not having that same conversation with myself that you guys are having with yourselves. So you're not going to put that shit on me. You're just not, okay? There's plenty of other people here that are doing a good job, that are trying to learn. And if you're messing with their emotions, you're going to get banned. If you're telling them to do shit that's outside of our rules, you're going to get banned. Okay, guys? There's people here that are trying. They're trying to do the right thing. You should follow in their lead and not try and mess with what they're doing, okay? You should learn from them and be like, look, these guys are patient, way more fucking patient than I am. Maybe it's me that's the problem. Maybe it's not everybody else. You ever thought about it that way? I guarantee most of you have not. You guys all think, you're God's gift to earth and shit. But, you obviously create more problems than you do solutions, right? So don't be that guy. Duck's trying to be here helping people, right? I'm here to help people. Do I have to do that? No. I could close my damn Twitter and vanish, right? And just deal with my own shit, right? But I guess maybe, I don't know, maybe I got too big of a heart for that. But people are working on affecting that in the opposite way every fucking day. So we'll see how long I can last, I guess. But yeah, I mean, guys, this isn't something that you should be stressed about, okay? If your trading career is causing stress, you need to reevaluate everything that you're doing, okay? You guys need to just This should be. This should create. This should create prosperity. This should create financial freedom. This should create stress from the 9 to 5. This should be able to bring your family to live a better life for themselves, right? But if you guys are pissing away all your family's money over leveraging, all you're doing is the exact opposite of what you're here to do. Okay, guys? Don't understand why you're here. You came here to display creativity in a world where you're not allowed. You're here to create financial freedom from a 9 to 5 job working for the man, right? You want to live your life. You're here to live. You're here to travel, see the world, just be at ease, right? So you got to remember why you're here. You got to remember the end goal. And don't do things that can hurt that end goal. Do things that can help that end goal be fulfilled, right? Come to fruition. Well, how do we do that? We need to compound gains, increase our stack overall consistently. Okay? If you have, what I noticed from you guys over the past few weeks is everyone was having plenty of fun, right, initially, but it's when you got greedy. It's when you got too cocky, right? Too over positioned, too over leveraged. That's when things went bad, right? But prior to that, like when you first jumped in, you were probably like, oh, I don't actually trade that much position normally. It's the fact that we were hitting trades that got you that way, right? It's okay. That happens. That's literally one of the emotional factors that you're going to encounter when reading or listening to Mark Douglas Trading in the Zone. You're going to hear him talk about there's traders that you get on a roll, you get so damn good, you're hitting trade, then you get too cocky and you give it all back in one trade. You can't do that, guys. You cannot do that. You can't let a bunch of wins be given back by one bad loss. Okay? It doesn't work that way. That's where the position sizing becomes the most relevant. Okay, guys? A bunch of wins, steady wins, were increasing your stack. That one loss should not have crippled it. It should have just been one of those trades given back. You had 20 winners, and then you had one loser give it all back. Well, 20 winners and then one loser should have end resulted in 19 winners. Okay? Because all you did was give one of those 20 wins back. You didn't give all 20 plus another 20. What the fuck is that? You know what I mean? You would have gave back one, lost because you had one gained previously. That's it. That's how it should be. And most of our winners, guys, are 3 wins in 1 win. We're trading 3R to 1. So when we have a winner, it hits 3 R's. When we have a loser, it hits 1 R. That means one winner can cover 2 losers and still break even. 33%, right? Anything above that is gravy, guys. 2 winners followed by 1 loss should still result in a profitable trader. If that math is not penciling out the way I'm saying it for you, it's because you're breaking the rules. Over-positioned, over-leveraged, 1 loss cripples the whole stack. All the hard work given away because of 1 mistake. And guess what, guys? That's going to be the case for eternity. We could sit here for the next 3 years and bang out trade after trade after trade. I could turn your guys' stack from 10 grand to 10 million. And you know what? 5 years from now, 1 bad trade, you'll give it all back. It's never going to stop being that way, guys. So don't think that because, now you got, you turn your 10K into 100 million, you've made it. You could do whatever the fuck you want. You could trade with whatever leverage you want, whatever position size you want. Yeah, you know what else is going to happen? A quick fucking reality check all the way back to 10K again, if you're even fucking lucky, right? I'm telling you guys, never, never, never once is it okay to get greedy like that. The second you do, you get bit. The second you fucking do, you get bit. Remember, write that down. Write that down. Okay? Emotionally, being able to control oneself in every trade, every time, no matter what day, week, year, month, time frame, whatever's going on in your life, the fact that you could control your trading mindset like that nonstop is the only way to become, those 1%ers that they talk about, guys. Anything aside from that, you're just part of the liquidity. So it's like, okay, you have now been told what you have to do. You have the winning strategy, the winning plan, the winning cheat sheet, whatever you want to call it, guys. You now understand it. Well, I don't know if you understand it, but you at least have been told it several times. Definitely every stream I've been giving you, you guys have heard it. So it's like, okay, guys, you're being taught how to fish. I've showed you where the water is. I showed you where the corner in the bend of the river is. It's just up to you guys to wait and only hit those perfect corners, right? Don't trade the chop in the middle of the stream. Just wait for the river to bend. Hit those corners where those fish are hanging out, right? Don't trade that chop. Just keep walking until you get to that next corner. That's that waiting for that next trade to develop. Okay, guys? Every time you cast, do you catch a fish? No, that's not reality, right? But if you do it correctly, in enough times, right, in the right area, you will catch a fish. You will eat dinner that night, right? But it's patient, right? You don't walk down the river, cast one time, catch a big ass fish, come right back up and grill. Like, that's not reality, guys. It's a patient man's game. You're down there, you're waiting, you're strategically throwing that lure into the water, right? You're strategically placing it. You're using some skill you generated, that wrist motion on your rod, on your pole, right? You're strategically fishing. You're not just blindly jumping into the water like a fucking ape trying to catch a fish with your teeth. What will happen? You'll be in the water, liquidated, right? That's what happens there. So I know we didn't do a lot of charts today, guys, but it's because you guys, again, it's like crawl before you can walk or run. So if you guys aren't even able to crawl yet, I gotta stop showing you guys advanced patterns. I gotta break this way back to fucking square one and hold your hand until you learn how to crawl from one couch to the other, right? Without smashing your face against a coffee table. Only then can I then start talking to you about advanced type of trading stuff. It doesn't work if I do that right away. You guys don't understand shit. And again, a lot of stuff you guys should do, it's like you see me trading harmonics on Twitter and you're like, damn it, I need harmonics. That's what I'm missing out. And that was never the case. What it was more, your mindset was messed up that whole time and you just thought that harmonics were going to save you. But really, it was your mindset that was the problem. So guys, before you start looking at such advanced things, you need to have this basic understanding of, you need this foundation, right, to build upon. Somebody, again, it's like you're 10 years old and you're entering into the NBA dunk contest. It's like, bro, you can't even make a free throw yet. You can't even make a layup. How are you supposed to do a 360 dunk from the free throw line and win the contest? That's trading on high leverage over positioning. Okay, guys? That's also not understanding the fundamentals. When you play basketball, you need to learn how to dribble. You need to learn how to pass the ball, right? You don't just start doing 360 dunks. Okay, well, harmonics are your 360 dunks. Most advanced thing you could do on the basketball court, right? Most advanced thing you could do in trading. You don't start there. You got to start at the basics. Work your way up. You're never going to make it if you do it the other way around, guys. Never going to make it. I can give you any question you have in any one of those steps. There's an answer for you. You just have to ask the right questions based on where you are personally. There's guys in here that are ready for harmonics. There's guys in here that have been trading longer than me. Okay? So, everyone's at a different level, is what I'm trying to say. Just because I'm saying some of you guys aren't ready for it doesn't mean that's all of you. But yes, some of you are not ready for it. So you need to just be within your means, guys. Be within your means. Don't live outside of your means. You don't do that anything else in life, except for some reason you feel that in trading, you're just, the day you sat down in front of that screen, you're the GOAT, right? That's just, I mean, fuck. I mean, confidence is good, guys, but overconfidence is called greed. So find a happy medium, okay? Yeah, I know I've just been like going on this fucking rant for like a long time. So I apologize if it's like, if I'm repeating the same shit over and over again. It's just me trying to drill it into your head, I guess, is the only way. It's the only thing I'm attempting to do here. So, but yeah, I guess we'll just continue this back in the Discord again. Good news is, guys, the PC shipped Friday. Should be here Tuesday. Hopefully that eliminates all of our streaming issues, lag, 1080p quality, fan noise, all that stuff. So we should be back up and running with higher, even better stream quality and content here next week, ideally. Of course, right when it comes in, Duck does have to fly to Houston, solve more people's problems, right? But ideally, if the internet works good at the hotel in Houston, I'll just stream from there. You know what I mean? So like that doesn't have to stop us. I'll just be streaming from the hotel off the laptop. We'll be dealing with the fan noise, but we'll still be streaming. But again, once I'm back from Houston, all that good stuff, we're on the new PC, and we could get back to this. But guys, before we do that, you gotta get your minds right, okay? Please get your minds right. Stop doing that bad bullshit. That over leveraging, over positioning has to go, okay? And I don't know, I don't understand why you would even fight it. Maybe because you feel like you lost a lot in a small amount of period of time and you need to quickly get that back. But I'm going to tell you something. You're just going to compound the losses instead of the gains, right? So at some point you just need to you guys just need to just calm down. If you took a fucking loss, the only way, look guys, we make mistakes, okay? The only time it's a mistake, though, truly a mistake, is if you fail to learn from it. If you got liquidated if your whole fucking stack, the worst case scenario, as long as you learn from that, it's still not a complete loss, guys. What you will learn is that, okay, how did that happen? Okay, I had my whole stack in there. Okay, I'm not going to do that again. What else? How did that happen? I leverage. Damn, even though I was even on pretty low leverage, I thought, well, maybe low leverage is still too much leverage for me. So, okay, I'm going to eliminate over positioning, and I'm going to stop using leverage for the next 6 months. And I'm going to see if what Duck said was right, that it was me the whole time. It was my leverage. As soon as I went to spot, the whole world changed for me. It'd be like that, okay? Really do. In time, you could come back to leverage. It's not fucking going anywhere, guys. There's always going to be the opportunity to max degen at any given moment's notice. It's 24/7 market. You can literally all in 100x your whole stack whenever the fuck you want at any given moment in time. You're never going to lack that, okay? So don't feel like you're missing out on that, all right? What you are missing out on, though, is compounding gains. So let's work on the fundamentals. Get back to the basics. Chip away, guys. Think about cutting down a redwood in California, right? And all you have in your hand is an axe. Okay? How would you cut down that redwood? You'd look at you walk up to it and you'd be like, "Oh man, this is an overwhelming fucking task. I'm never going to get this thing down." But if you just start chipping away at it, chip away, before you know it, that fucking redwood's on the ground. And you did that with your axe, right? But it's because you chipped away, little at a time. You didn't run full sprint, face forward, slam face into the tree, did you? No. You chipped away, methodically, strategically, placing that axe in very strategic points based on previous points, right? You became methodical, you had patience, you understood the task at hand was extremely large, hence your retirement. Task at hand extremely large, but I'm not going to run face first into a brick wall trying to get there. I'm going to methodically chop away. Okay, guys? So I don't want to go too much further than that. I don't want to offend anybody's safe space any further, so I'm going to go ahead and just call that a wrap for the moment. I will be charting for another couple hours though tonight, guys, so we can go ahead and do some chart requests, so you guys can still see some charts that maybe you were hoping to see right now. I just didn't want to get sidetracked with the chart. I felt like again, guys, I tell you guys this, 40% is technical, 60% is emotional. So why was I going to go into the 40% on technicals when you guys needed the 60% even more, right? It's a more important part of what's happening here, the 60%, okay? So you need to understand that I'm putting more weight on that because it's more important, okay? So 60% mental, 40% technical, 0% fundamental. Okay?